Hello everyone. If you are wondering whether you should subscribe to the IRFC IPO or not, this video will aim to answer that for you. The company is looking to raise over Rs 4,600 crore. The IPO opens on 18th January and closes on 20th January. The price band has been set at Rs 25 to Rs 26 per share for a lot of 575 shares. IRFC is the dedicated market borrowing arm of the Indian Railways, which is majorly held by the Government of India. Their primary business is financing the acquisition of rolling stock assets, leasing of railway infrastructure assets and national projects of the government, and lending to other entities of the Ministry of Railways. For FY 2020, the company financed a sum of Rs 71,392 crore, which accounted for over 48% of total capex of Indian Railways. The AUM of the company consists of about 55% of lease receivables and 42% of advances against leasing of project assets, among others. Moving on, IRFC's business model has been robust with consistent profits. Accordingly, the ROEs have been stable over the past 3 years, with the company delivering a respectable average of 11% over the period, which is more or less in line with peers in this space. Net interest margins of the company have been low and are seeing a declining trend since FY 2018, while the interest income has risen over time. This indicates that while interest income has risen, the interest costs have grown faster, which is a concern for the margins of the company and needs to be watched. Financial performance has been robust, with the PAT growing smartly at about 26% CAGR over the past 3 years. Revenues, on the other hand, have grown at about 20.7% over the same period, which indicates an improvement in profit margins for IRFC over this period. Along with this, IRFC's book involves mostly risk-free lending made to Indian Railways, which is backed by the Ministry of Railways. This has allowed the company to have nil NPAs on loans and leases over the years, which is positive for the company. The company has a broad range of funding sources, which enables IRFC to have lower borrowing costs, which ranged between 6.8% to 7.2% over the past 3 years, which aids the margins positively. Driven by multiple projects, the AUM and profits have seen strong growth over the past 3 years. Matching the fast growth, the capital adequacy ratio has been maintained at around 300%, indicating that ample capital cushion is available with the company. IRFC is a direct play on the Indian Railways growth theme, which will grow as the rail infrastructure of India is developed over the long term. With the rising debt allocated to strengthen rail infra, IRFC is well positioned to grow. Moving on to risks, the margins are highly influenced by the Ministry of Railways in the lease agreements. Hence, there can be no assurance that the margin determined will be favorable for IRFC going forward. Any adverse determination of the margin will also impact its profitability. This also entails high concentration risk as it derives its majority revenue from lending to the Indian Railways. Due to mismatch of payment schedules in the tenor of leases and borrowings, significant reinvestment and liquidity risks may arise, impacting future returns. With large financing needs of the railways, IRFC needs to have large sources of funding available to them. Incapability in arranging these funds will result in the rise of interest costs, as IRFC will have to seek loans at higher rates. There are a couple violations with regards to SEBI listing regulations that the company has not resolved yet. This stands to harm the corporate governance of the company and creates a reputation risk. IRFC is listing at a post-listing PE of 10.6 times, which is slightly higher than other term lending institutions. While the company enjoys a risk-free lending profile and nil NPAs, which strengthen the book's quality, low NIMs, influence of the Railway Ministry, and an increase in funding costs remain a concern for the long-term growth. Hence, we recommend investors to assess their own risk appetite before applying to this IPO for listing gains, only since it is a short-term, high-risk bet. Thank you.